Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 1st of May. Starting off with the FTSE 100, which is consolidating the recent support around 81.30. We're looking for 82.30 at the top of that rising December trend channel. We were looking for that hopefully early this month and possibly up to 8,500 by the end of next month, or even sooner. If we're really lucky, I suppose it would be 8,500 by the end of this month. On the downside, below 81.30, there's the risk of a test of the old April resistance 80.44. But at least while we're above that, then we are still thinking of ongoing record highs. If we do break down, then the worst at this stage is expected to be around 78.80, which was the initial April support. And we have that 50-day line on the floor of the channel not far below that. Moving on to the DAX, and here one would imagine that we're still trying to find support. Recent resistance around 18,200 and the floor of the channel there from back in October around 17,900, so that's probably where we'll find the support. Obviously there can be an overshoot of 50 or 100 points, etc. RSI not looking very chirpy with a double failure in the mid-50s, which tends to be a rather bad signal. And the view here, though, is that if we do break through 18,200, we could retest the highs of the year by the end of this month. Worst case scenario, I suppose, is a dip towards 17,500 post-March support. Onto the Dow, and here the picture not looking great. I think we can probably say that that rising trend channel from October is looking rather weak at the moment. There is support there, the April support there, 37,600. So hopefully that will kick in, otherwise below that, 37,000. And basically the support of 2024 would come into view, and it's maybe difficult to see how, with that double failure of the RSI at neutral 50, in fact we already had a failure at RSI 50 back in 3 times last month, it's difficult to see how this market could avoid a test of 2020 support, and that's a sort of interesting read across for what the FTSE may or may not do. Moving on to Bitcoin, and here not looking good. We were fearing 57 to 58,000 even before we broke down, and that's what we've got. Below 57,000, there's the risk of the February resistance there at 53,000, and maybe even a meeting with the 200-day moving average at 49,000, which would be quite horrific. The leading indicator on the breakdown was a combination of the ongoing failure there at the 50-day line, which is now falling, and the RSI 50 failure. So I suppose that double signal came in around 67,000, and we're $10,000 in on that particular signal or combination of signals. The other point to note is the RSI is now fast approaching the oversold 30 area. The last time we were this low was basically back in September or August, September. So it'll be interesting to see whether the RSI kicks in. Probably the favored destination at the moment would be looking to go long at around 53,000 at this stage. But let's see how we go. An end of day close back above 60,000 is what we need to get out of jail on crypto or on Bitcoin at the moment. Moving on to gold, where the rug has also been pulled. Difficult to see where we can go in terms of the upside while we've got that pattern there, the sort of the double top through 2400, and then the right shoulder there at 2360. Below 2360 and especially below 2300, we've got the risk of a move down to the 50-day moving average at 2230, which would not be nice after all the progress made in the recent past. But if you're a bull of gold, then at the moment you really want to see this market close above and remain above 2300 on a consistent basis for the rest of the week. Moving on to the stocks, and a stock which I haven't looked at for quite some time, which is Alpha Growth. Here you can see that we've hit a very old target that we had there at the top of that broadening triangle from the summer, so that was around 2.2 pence. Above 2.2 pence on an end-of-day close basis, we're looking for up to 3 pence, maybe by the end of next month. But it's interesting that the shares have rallied vertically over the past couple of sessions and without a gap. At this stage, only back below resistance, January resistance on the way down, 1 3/4 pence, really killing the idea of a lasting turnaround there. I thought about covering Altitude in the RNS hot list this morning, but then thought that not many people look at this company because not many people have even heard of it. But on the charting front, we've got a bear trap gap reversal from below the July support there at 34 pence. Above that, looking for 48 pence at the top of that broadening triangle from back in September. Upside value while we hold above recent February resistance at 32 pence. So actually looking like a decent situation, and it was actually a good update today. On to Cornish Metals, where I think today's update also pretty good, probably better than many were expected, certainly better than I was expecting. And here we've got the situation where we gapped through the 200-day moving average at 10 3/4 above that, looking for 15 or 16 pence as soon as the end of this month. The reason for the relative optimism is the way that we've consolidated above a rising 50-day line. So it's a sideways shuffle breakout with a gap. So that looks like a decent signal on Cornish there at the moment. And obviously the whole thing, the recovery from last month, is a bear trap rebound from below the old October support around 9 pence. Very happy to see that CleanTech Lithium is stepping up to the plate at the moment. Looks as though, ironically, the departure of the CEO has been a shot in the arm for the shares, and we were looking at this as basically as a potential turnaround from the 15 pence area when it broke that line there from December. Above that, the initial target, 22 pence, and at the moment looking for the shares to fill that gap up to 25 pence, 25.5 pence, the top of the gap down from November. If you're a fan of the shares and looking for greater glory, then that would be 30 pence plus by the end of this month, which is the 200-day moving average at old November resistance. Moving along to Concurrent, which had an update today, and the market seems to have liked it, gapping to new highs within a rising trend channel from July. Top of the channel there, heading towards £1.17, and we're looking for that while we remain above the £1 area for the latest gap on an end-of-day close basis. Next up is Eco, which was initially suggested by a follower on Twitter, I think below 9 pence. So we've already gone up a decent amount. Second target here actually 13 pence, which hopefully will be hit in a day or two. Big picture target up to 20 pence, maybe by the end of next month at the top of that broadening triangle from June last year. Stock which I don't think anybody really looks at is Image Scan, but here we've got a bear trap gap reversal, in fact a double one. Had a gap higher in March, haven't filled the gap and then gapped up again. So that is a very strong signal, as is the way that we gapped down in February. So it's a bear trap island reversal. So we've got multiple bullish charting signals there. Above the floor of the recent range, 1.2 pence, looking for 2.1 pence perhaps by the end of next month. If that works, it'd be quite a triumph for those for sort of forensic charting on that situation. On to Canabo, which I'm also surprised I'm looking at again, but here we had the initial target there, that resistance line, September triangle top, 2 pence. We hit that last month, and back in March, in fact, and looking to hit that again at 2.1 pence in the first half of May. Best case by the end of next month would be a retest of the December resistance at 3 pence and that June resistance line projection. The reason for the relative optimism here is that it looks as though, well, with the gap higher today, that's one plus point, but also it looks as though we'll have both the 50 and 200-day lines rising into a golden cross later this month, and that tends to be the strongest part in the cycle. Decent patent news from Poolbeg today, and gapping to new highs, which I suppose we've been waiting a long time on. Rising trend channel there from September, and top of the channel there at 15 pence, which we're looking for well before the end of this month, while we remain above 12 pence on an end-of-day close basis. Finally, looks as though the shares will get a proper valuation. Interesting chart at the moment with Reabold Resources, which has obviously been in the wars of late. Here we've had a bounce off the 50-day line. That's there at 007, let's call it. The resistance line there from November as well, above 007, looking for 0.11 perhaps as soon as the end of this month, if the people chasing the shares on the basis of the company's cash are correct. But the key here is holding that 50-day line. On to Sareum, which had a good run the other week, and here bouncing off the 50-day line, which is normally a good thing. 23 pence is that level, and looking for up to 45 pence maybe by the end of this month if we hold above that 50-day moving average. Moving on to a stock which has surprised even me on the downside. Here we've had Shield Therapeutics, which has completely imploded in terms of the share price, but we may have a bit of a light at the end of the tunnel, or light at the end of this falling wedge. Break of that resistance line there from February at 1.3 pence. Above that, looking for the shares to hit the 50-day moving average and retest April resistance at 2 pence early on in May. But the key here is holding that 1.3 pence level, so that needs to be held, and we've got a decent setup there on that basis. Moving on to an M&A situation, which I think I covered not too long ago in terms of the charting situation. Had a rising trend channel base. Obviously, we gapped down, pulled the rug before the takeover news, which is always interesting and perhaps a bit suspicious as well. The floor of the channel there was around the 50-day moving average, around 40 pence. But what's interesting here is that the shares have actually gone up to the target that we had there, around 52, 53 pence at the top of that channel. So interesting that the fundamentals and the technicals mix there, despite that little rug pull there before, which is not a rare thing, it has to be said. Finishing off with the bear's favourite, Tern, which is, I have to say, if it wasn't Tern, one would be quite bullish about the stock, but we've got rising 50-day line, sideways shuffle above that rising 50-day line. Obviously, we had the failure at the 200-day moving average, but one suspects that it will be second time or third time lucky in terms of breaking that 200-day line. You can see the shares haven't really done that for over a year properly, but that 200-day moving average at 3.7 pence above that, looking for up to 5 pence by the end of this month. Ideally, we stay above the floor of the April gap at 3 pence in the meantime. So above 3, looking for 5 on Tern, fundraisers and other potential mishaps permitting. That's it for me today. More updates tomorrow.